Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Tuesday, October 11th. And I just want to start out by saying that if you enjoy this type of content, please subscribe on YouTube and follow us wherever you listen to podcasts to get the most up-to-date content. I release one of these episodes every single day that the market is open, and I release a longer, more in-depth episode over the weekends, as well as some miscellaneous special episodes just sprinkled in here or there. And I want to start doing some special series here in the near future. So let's get right into it. Today, the markets were a little bit mixed. The Dow actually finished green today, but the NASDAQ and the S&P 500 suffered a different fate. The NASDAQ was down 1.1% and the S&P 500 was down 0.65%. So there's some critical information coming out this week that definitely could have a heavy influence on where the markets go next. Obviously, we have the CPI coming out on Thursday, and there was a very big move following the release of that number last month. And then tomorrow we have the PPI, and obviously the market will be looking to that number as well. But the bigger number is definitely the consumer price index, which will come out on Thursday. And that's going to tell a lot about where we're at. We'll see if inflation is on the trajectory back down or if it's stagnated at these high levels. We're going to see. The Fed is going to need to see, the whole market's going to need to see that we're not just staying flat. So even if inflation is 0% month over month, that's not good because we'll finish the year over 6% still, even if that's the case. So what we really need to see is deflation month over month. We're going to need to see that it's actually headed down, that the Fed is actually doing what it's saying it's trying to do, and destroying demand, bringing prices down. But that'll be a big number, and I wouldn't be surprised if the market swayed pretty heavily after that number comes out. The CEO of JP Morgan said in an interview with CNBC that he sees stocks falling at least 20% from current levels, depending on the economic outcome of the Fed's actions, and warned also that the U.S. economy may enter a recession by the mid-2023. And I just thought that was funny. Like we already haven't entered a recession. People who listen to this show know my belief on that. The definition of a recession is back-to-back quarters of real GDP decline. The economy is receding, quite literally, is just what that means. And we've already had that. So they're saying that the job market is too strong, and that's why there's not a depression, not a recession. But we did have an episode earlier, a couple months ago, and we were talking about the quality of the jobs being created, that just because the jobs numbers itself are going up, our workforce has actually shrank since COVID. So we've reached the level of jobs that we were at before the pandemic, but we actually aren't back to the same number of workers in the workforce. So that's a glaring signal that there are a lot of people working two jobs, which would be a recession indicator in my book, and that the quality of the jobs probably aren't very good, which is another recession indicator. So I don't think the job market is as strong as the government and the Fed is making it seem, but obviously they need to push that narrative to be able to keep tightening as hard and aggressively as they want to. So enough of that, and I will get into the charts. So on the S&P 500, it looks this looks a little scary because we came back up to this zone, which has been a heavy support. It's pretty much been the lows in this market. and we bounced right off of it. And that's coming ahead of two huge data points the next 2 days in the PPI and the CPI. And unless those numbers swing heavy in a favorable direction for the economy, so we see inflation really starting to fall, I just don't think that this market is going to hold here. It doesn't look like it wants to. It looks like it wants to push down farther. And when that happens, it can be kind of aggressive. We saw last month, this is what happened when the CPI came out. We were down over 4% in one day and continued down the next 3 days after that. So it could get a little bit scary out here. Again, if you haven't seen the chart of this market correlated with 2008, it's pretty scary how correlated they are, and we're sitting right before that huge sell-off, the really scary moment in that market. So I do think the numbers coming out this week is going to be important, and it's something that you should be aware of for sure. And I wouldn't go placing too many bullish bets. That would be pretty speculative at this point, especially when the technicals look the way that they do right now. So let's take a look at Bitcoin. It's staying right under this trend line, so it just won't even go back up to touch this trend line. We're getting to the point now where it's make it or break it. So technically speaking, it's going to have to break over this trend line or break lower in the next 2 or 3 days, which would also align with what we're seeing on the S&P 500. So a little bit of confirmation there. And we've said before that the 17.5 to the 17.7 is that huge point for Bitcoin. If we break below that level, there's nothing really supporting it until the 9 to 12,000, which would be a great level to come in as a buyer. And I know that there are definitely some people waiting for that possible scenario. So that's what I'm looking at on Bitcoin. I do think that this trend line, I'm happy that it's holding as good as it is. Not for the price, but just for the sake of our analysis, we know that we were looking at the right levels. So that's really what's happening right now in the markets. The next 2 days are going to be really, really big as far as what the sentiment is going to be like for the next month at least. If we get a disappointing inflation number, obviously the market will move because of that, but then that's going to allow the Fed to continue to be super hawkish and kind of just reaffirm their courses of action that they're taking right now. And it won't really give them any incentive to change. So there's a lot of people calling out the Fed and claiming that they're making a mistake by tightening as hard as they are, as fast as they are. But I don't really think there's going to be any grounds for the Fed to look at that and validate it at all if these data points come out and kind of solidify that inflation is still sticky. I think that they're going to have to keep tightening like they are, and that's not going to be good for these markets right now. So that's what I'm looking at. It's not all bad. If you haven't watched this past weekend's episode of the Weekly app, definitely be sure to do that because there's a lot of great info in there. And stay tuned here for the rest of the week and throughout the weekend. There will be some great episodes published here as well. So again, if you like this, make sure to stay tuned and subscribe on YouTube and follow wherever you listen to podcasts. It would mean a lot to me and the channel. And until then, I will see you next time, and thank you for listening.